All right, welcome back, everyone. Hope you had an enjoyable coffee break. I know it's exciting. As a many conference attendee myself, some of the best parts are the small chats that you get to have with people. And so after this panel, we will be able to move into a lunch break where we'll get to have a lot more kind of discussion amongst ourselves. And so appreciate you all returning to seating for this event. I'm excited that for our next session, we're going to hear from general partners who are charged with vetting investment targets and making strategic investment decisions. Each member of this panel has tested the CSB's new tools and hopefully the RASI framework as well and can speak firsthand to its utilization. To moderate this conversation, I'm pleased to present Florent Nanse, principal at Arthur D. Little and committed leader of ADL's Global ESG Initiative. He's been an invaluable thought partner and provided us with the very talented Julian Marchesi on secondment. Julian led the development of the sustainability value driver tool the panel will be discussing. If you have other people that you can offer me on secondment, I'd certainly take you up on that. But with that, I'll welcome Florent, Principal Arthur D. Little, and his panel. Over to you.
Thank you. Good morning. I'm very glad to be here. My name is also Florent Nanse. I'm principal at Arthur D. Little. I focus my work on growth and value creation for industrial firm, private equity portfolio company as well. And I'm sitting here in the critical path to your lunch break to facilitate and moderate this panel on the very important topic of sustainability as a value driver for private equity. As we saw from Nanse's presentation, private equity has the power to move the needle related to sustainability. And so we would like to make it practical. So you saw quite theoretical, but you drink that from the fire hose just half an hour ago about the tool that we developed in collaboration with NYU. And now we would like to add a layer of practicality with real life and field testing feedback with this panel. So for that, I'm here in company of a great panel. Thanks for joining. So we have Jennifer Flood. So Jennifer, you are the head of sustainability in North America at InvestIndustrial. We have Angela Jhanji. Angela, you are managing director at EQT, where you lead the sustainability integration for private capital business line. And we have Alison Fenton-Willock, and you are a director of sustainable investing at KKR. I would like to take the opportunity to thank you once again for the support over the past month and your very valuable feedback on that tool. And happy to have you here. So thanks for this panel. As an introduction, I would like to set the baseline because we've been working with more than 30 stakeholders of the private equity sector to interview, understand their needs, understand the roadblock as well, and maybe to give a little bit of very practical feedback around this and create the baseline of how you handle this. It would be good to first start with the first round of questions related to what's your current approach? How are you doing it? Both on the pre-investment or the due diligence phase, but also once you acquire the company, how you are focusing your effort and how you make sure that you have an impact financially and you create the financial and societal value that you are expecting. So that's maybe the first round of questions that I would like to ask. Again, let's try to make it very practical. You are the person that are on the field, so take concrete example on a specific company and please show us how you do it on the field. Maybe who wants to start? Jennifer?
I'll start.
Yeah.
First of all, thanks for having me here. It's great to be here, and it's great to be at this private equity-focused conference on sustainability. I think it's fantastic. So why don't I start with how we approach sustainability at InvestIndustrial, and then I'll give you some real-life examples. And I really want to focus on the examples because I think that's probably where everyone's going to be most interested. And then, of course, if you have questions on our approach, please come find me after the session today. So how do we approach it? So at InvestIndustrial, we're a part of the whole deal cycle, right from the beginning to the exit. From a pre-acquisition standpoint, we're working with several members of our team deal team, legal team, operations team in which we sit, to assess the target. We'll get pulled in quite early if there is, if the business is in a sector or an industry where sustainability is a real concern, there is a real risk. So an example of this is a company that we had recently where it's a plastic packaging business for the beauty industry. And I'll come back to this later from a value creation standpoint. But one of the things that we were looking at straight off before we really dived into the due diligence in a more comprehensive way was, is this business going to be disrupted by regulation down the road? And so we took a deep dive from the ESG standpoint before we ever moved forward with the further due diligence for that business. So that's an example of how we're pulled in right at the beginning, and we're part of that due diligence process all the way through to the final, investment recommendation. So the work we do is we do full comprehensive sustainability assessments. We're looking at, we'll do an EHS technical review. We'll look at the company from a repres standpoint. We'll look at the material topics. We'll try to understand how that company's tracking against its competitors, its customers, on and on and on. There's quite a lot of work that we'll do in that pre-investment stage. Once the business is acquired, then we move into the post-acquisition monitoring stage. Again, we are very hands-on. We take a very holistic view of what sustainability means from a value creation standpoint. We believe it's a part of every business's journey. It's not just one or two things that we're looking at, but the objective is to embed sustainability into that business and really use it as one of the value drivers for that business as it goes forward. In the holding period, we have a playbook that we roll out for all of our companies. How we actually execute against that playbook looks very different business by business because every business is unique and there are different value drivers for each industry and each business that we lean into. But we're working very closely with the management. We're working very closely with our deal team to identify what is going to be the value drivers for this business, what is the foundation they need to have in place, and how do we get our management to really think differently, think more sustainably in terms of how they take their business forward. And then when it comes to the exit, again, we're sitting down with the management of the company, we're sitting down with our deal team to really focus what are going to be the highlights for this business as it comes time to exit, what are going to be the areas that the buyers are going to be looking at from a sustainability standpoint, and how do we really show how the company has performed and delivered against these. So that's the process. Now, what does that look like from a value creation standpoint? To give you some hard examples, I'll give you the examples of 3 of our different portfolio companies. I can give you a lot more. One of our companies was, and this is a multiple expansion example. So this is one of our companies, is Centered Stone manufacturer based in Spain. They are a supplier to the building materials sector. So they create facades on buildings. They create interior facades in homes. Kitchen tops is one of their kind of key primary products. When we went into the business, there wasn't really a focus on sustainability. Their product was sustainable in many different ways, but they weren't really using this as part of their value creation levers. This was a business that was beholden to the EU ETS, which meant that they were paying for carbon as well. So one of the many things that we did with the company, worked on a decarbonization strategy where we looked at first of all moving to renewable energy, other decarbonization steps to reduce their scope 1. We worked on product innovation. This is a company where silicosis was a real risk in the industry to the workers. So this is a company by the end of our holding period that had the lowest level of silica on the product. And there were more and more things that we did with that company. When it came time to exit that company, the sustainability story in terms of what we accomplished and what the company could represent, they had a Gold EcoVadis rating, they had the right kind of frameworks and policies in place, and they had a very clear strategy of where they were going as well. They stood out against their competitors. And so when it came time to exit that business, the sustainability transformation of the business helped the transformation of the company in general, and it became more of a supplier to the design industry, and therefore multiple expansion at exit. So that's an example of the value creation that it can bring to the table. I'll go back to the example of the company where we were looking more in depth about during the due diligence phase in terms of the plastics regulation that we were facing. That's a business where the customers are the big beauty industry customers. They're more ambitious than the regulators. And so what that meant for this company is by being a best-in-class sustainable company, they were able to position themselves with their supplier as a partner of choice. An example of that is when the beauty industry was focusing on supplier diversification, they couldn't diversify the supplier. They couldn't find another supplier that ticked all the boxes and delivered the same quality product to them. So that's an example of resilience from a value creation standpoint. But now also, those same customers are coming back to them to say, okay, we know that you're excellent from an innovation, from an environmental standpoint. Can you help us with our own diversity and inclusion commitments? Can you help us with our position on solidarity? Again, another opportunity for them to become that partner of choice. So those are just a couple of examples of how you can use sustainability, how it is one of the core elements of value creation. But it's not the only one, of course. Obviously, we're doing a lot from a private equity standpoint. But those are some examples.
Thank you.
You're welcome.
Do you want to continue with some additional example and maybe as building up on upon the comments that Jennifer made?
Sure, happy to. So thanks for having me here. Thanks, Jhanji. I'm Alison. I'm with KKR. And so our responsible investment policy is actually public. It's on our website. And it outlines what our approach is to responsible investing and makes very similar points to what you heard a few minutes ago, one of which is that when we are reviewing companies in the pre-investment stage, we're really trying to focus on what are the issues that are really material to this company. I came into the room late and I missed the joke that was made about SASB, but we do use SASB in our diligence process as one of the key inputs to help us really get into figuring out, for this company within this sector, what are the issues that we make sure that we need to be paying attention to. SASB is not the end-all, be-all. First of all, for every company that's in our portfolio, we probably have to pull in 2, 3, sometimes even 4 different SASB industry guides to really cover what that company's business is and to get at all of the issues. We also find that we need to layer on issues always on top of the SASB metrics to really capture all of the topics that we need to be paying attention to, but we do use them as a primary input. We also leverage just the deep bank of learnings that we've accumulated over the decades of investing at the firm. There's experience and there are learnings and there's education that we've gotten just from being in the private equity business for several decades and having seen some of our portfolio companies with what they're doing on sustainability issues. And so that deep library also layers on and factors into the diligence process as well. And also, we don't do diligence for the most part ourselves at KKR entirely. So we often rely on third-party subject matter experts. We will bring in ESG consultants and ESG specialists, sometimes very technical specialists, depending on what the subset of issues are that we want to dive deeply into. And they will be able to then, make a contribution as well to us building up a complete sustainability profile of this company before we invest. So there's all of that goes on. One of the things that we also try to make sure that we do is to use technology really well and to make sure that members of the sustainable investing team are integrated into the pipes and plumbing of the investing process and the deal flow process so that we're building relationships with the deal teams, yes, and they know when they need to come and have a conversation with the team, but also all members of the team are seeing deals as they're going through the pipelines. And so we can also reach out proactively if something ever gets missed, for example. And so that's sort of on diligence, right? When companies are in the portfolio, the focus on material ESG issues remains. And so we will continue working with companies to make sure that they're really strengthening their performance, their approach, their strategy to those topics. We also do a number of different things once companies are in the portfolio. So one of the things that we do, I'm actually on a corporate board myself. We use our directors who sit on the boards of our portfolio companies to help drive sustainability strategy. So one of the things that our team does is we have launched a board education series where we go out to all of our portfolio company directors and educate them about what it means to be a director and be in a seat where you have responsibility for overseeing sustainability strategy at that company. Your role is not just related to audit, risk, and the typical things that boards concern themselves with. And so we educate them on, what that means. We use our board seats for that. We also spend quite a bit of time educating our deal teams as well, because they are engaging with the portfolio companies also. And so we provide them tools so that they understand how to engage with portfolio companies. And we spend a lot of time also building out resources, and they may come in different forms. It may be toolkits, frameworks, maybe webinars that we organize. Some of them may be across the portfolio, some of them might be sector-based, where we get our portfolio companies together, and this is to get at the practitioner level within the company, right? The board members are interacting with the C-suite, and so we also want to get at companies in the management and below levels as well. And so we'll engage with them to provide them with the resources that they need to really drive the company's sustainability progress forward. And so through our engagement with portfolio companies, we're endeavoring to drive that progress as well. And so it's both, before we invest as well as after we invest. In addition to all of these sort of material ESG issues and things that are specific to each company, we also spend a lot of time every year doing an annual ESG data collection across the portfolio. And the reason I bring this up is because the data that we collect through that exercise really helps us to understand certain key metrics that are sector agnostic, geography agnostic across the broad-ranging portfolio that we have. And we're able to figure out where there are pockets where we can really help the portfolio companies, or where are there things that are applicable to all of our companies, no matter what sector they're in, and we might want to build out additional programming around that. And so we've done that in what we call our global ambitions.
And are you linking that specifically on risk, but also on the value creation? Because that's the whole potential impact that we can drive, right? So how can you do that?
I mean, it's both, right? The risk protection, the value protection piece of ESG will never go away. There are just sometimes the reason you do something as a business is because you want to protect the downside. Sometimes you do it because you want to capture the upside, right? It's always going to be both. The example I thought of when you asked the question about sustainability transformation is one of the programs that we have at KKR where we drive broad-based employee ownership throughout companies in our portfolio. And what it allows us to do is to get into a company, award employees an ownership stake in the portfolio company that they will receive upon exit based upon how successful the investment is, so they share in our upside. In addition to the ownership program, there are a lot of other elements to the program behind just giving employees shares. So for example, one of the things that we do is we'll give them a voice in certain management decisions at the company. We will allow them to, raise suggestions about things that they're seeing at the company that could be improved. So it's about being an owner and then empowering them to act like owners. There's also a lot of work behind employee engagement and culture. And what we've seen in companies that we've done this is dramatic improvements in employee engagement, in productivity, incredible reductions in employee attrition. And all of these things impact your bottom line because they impact productivity, they impact the innovation of your workforce, et cetera. So there are examples of it, like the work that we did at Ingersoll Rand, for example, at CHI overhead doors, where we actually have these statistics, right, of employee engagement going from the 19th percentile at one company to the 90th percentile by the time we're ready to exit. And those things make a meaningful difference in the commercial success of the company.
Thank you. Very interesting. Maybe Angela, the EQT way of doing it. Do you have an additional comment and example?
Sure, and let me try and be additive to the two very thorough processes we've just had. And so maybe I'll start off with diligence, but really what we're aiming for and what we're thinking about during diligence is what happens if this company comes into our hold period and we want to drive sustainable transformation. So in terms of diligence, we obviously, similarly to a lot of the GPs out there, we have sparring with our deal team, right, where we're going on a change management journey. We as EQT, I'll let you guys look up kind of online all of the commitments that we have. We have quite a number. I'm very privileged to work for a European investor who is influenced by European LPs who are definitely driving this agenda. So as we look at the sparring and as targets come in, we're baked into the deal team. And so as topics come up, as material topics come up, whether it's upside or downside, we'll get a quick call and a bit of a sense check as to, hey, what's the opportunity here? What's the enterprise risk at value? Or what's the upside potential? And what should be the dial in terms of sustainability diligence? As we go into sustainability diligence, I'll categorize it as if it's something like a software business where, sustainability isn't too material, aka we can have a look at it, we might have a look at some social aspects, but really from an environmental standpoint, we can probably get away with renewables. It won't be something that we actively really double click on, right? We'll do the diligence, we'll make sure that we've got our kind of downside and upside captured, but it's a relatively straightforward process. You wouldn't think that there's too much more else to do during diligence. However, if there is something either on the downside, so from a risk perspective, or from the upside, kind of a market, a revenue, a product, an opportunity, we'll go into a diligence process that starts to align to our commercial diligence. And that's really to drive sophistication in two things. It's to have a look at the investment when it's coming into the portfolio. So from an EQT perspective, how do we value this and where is the upside? How do we benchmark it against the full potential plan that will be happening when we invest in it? But equally, as we grow this business, what happens then? Because looking at a target just of entry obviously just shows us what we could do, but not necessarily what happens and what the side effects are of growing a business and expanding it and or having, more employees, et cetera, et cetera. So we'll run a pretty sophisticated diligence, pressure testing, and in my head, the way I think about it is essentially deriving the business case. What happens if you downside protect it when you're on a growth trajectory, and what would you have to do? What is the art of the possible? I think closed loop we're here, right? We talk about plastics. What is the alternative? How far can we get concretized around the quantification? What is the alternative? Is there a path to success? On the upside, if we were to look at this particular revenue stream or a sustainable product, or even an overlay on a software that would try and quantify GHG, is there an end market? Do we see some level of, in our expert interviews, the consumer starting to show up? Do we see a drive? Do we look at their customers and see some sort of GHG-linked incentive that would then make us believe that there is a market to be explored? So we go through that diligence process, and actually we also look at the exit, just to mention. And this is happening more and more. Now that we're in kind of this macroeconomic climate, and we're also aware, I think all the GPs in the room will know about kind of the dry powder, everyone's trying to deploy. We were, probably downside protecting our portfolio for a while earlier this year. In 6 or 7 years, the world's going to be a lot different. So it becomes quite material what these J&Js and pharmacos are saying about things like plastics. Because even if you didn't think it was such a big risk at entry, if it starts to become something that you're turbocharging, then at exit, you might actually be at risk of no one really wanting that particular portfolio company, specifically if you're investing at a certain size in a certain mature market, right? It's okay if you're a middle market firm and it's kind of a small ticket and you can probably get away with still having a customer. But we buy at the top end and we pay quite a lot for our investments, right? You start to think about what happens at IPO and what happens if you don't necessarily find a strategic. Now, all of that is, if we're building the business case and we're double clicking on what the downside and the upside is during diligence, specifically where it matters most in terms of material topics, the question becomes, if we're about to transact, what do we do now? And a framework that I always have in my head for our management teams, and agree with Alison, we equally have quite a lot of board. We have governance structures all around our investments to make sure that we're driving change, not only from a data reporting perspective, but from a transformation perspective. And so we use our full potential plan, that 100-day plan, to outline what the trajectory would be in all of our new investments. And that's something that we've committed to kind of publicly. When we come into the portfolio and we start to think about, the way that sustainability is talked about, and I think some of the things that Nanse talked about in terms of outcomes, impact, it's really confusing, right? We have a board champion on the board, a sustainability board champion that's assigned to every portfolio company, and it's their job to have a conversation in the first year around sustainability. But when you go into a portfolio company, and a lot of my peers will know this as operators, you don't know where that company is. And it might be a very big company or even maybe a public company, but the way that they're talking about sustainability needs real improvement, and they need to get a lot more material about what it is that they're trying to drive a transformation in. Sometimes it's not useful to just be reporting out SASB and TCFD if actually you're a people-based business and you haven't at all looked at DEI. So we think about it in kind of 4 quadrants that has actually been quite effective when you're talking to a board chair, a CEO, or even a management team who's quite new to sustainability. The first is downside risk protection, and that to me is risk, right? It's regulation, it's all of the changes, the stuff that California is putting out for our US portfolio companies, CSRD for our EU ones. But markets are changing, and you as a management team need to know, and in 6 years, if you're not doing this stuff, there's a problem. So let's just get that sorted. Let's do a bit of a baseline hygiene test on your policies, procedures, and what it means to be a robust company in our portfolio. The second, because we're a particular GP who has a lot of ambition, is our commitments. And those for us are must-haves. The downside risk protection and our commitments are something that every portfolio company in our portfolio must do. And examples of our commitments are, aligning to science-based targets. It's making sure that we're moving the diversity of our boards, of our management teams, starting to track, a number of things that we have committed to publicly that I won't go through right now. So all companies will do 1 and 2. Now, if you can do 1 and 2, and you actually, during the diligence, showcased a business case, or we were able to find something that we can turbocharge and drive up the dial, so it's really worth the GP's time to try and increase either the value in terms of revenue or the enterprise, or decrease the enterprise value at stake. We will then talk about value creation, which is our 3rd quadrant. Right? How do we look at operational efficiency on the downside? How do we look at revenue generation? And in the full potential plan, we'll use some of the business case we used in the diligence to essentially have a negotiation with that management team and start to come up with milestones and start the workshops around, can we do this in the next 3 or 4 years? What does a transformational KPI look like? What are we striving for? And what should we put on the radar as something that differentiates you as a business? And if you've already got to number 3, you'll probably get to number 4, should you be a market leader. And we kind of term that impact. If you can basically drive the robustness in your business model to the point where you are seeing some level of EBITDA adjustment up or down, then we assume that you can probably have an impact into the wider ecosystem. How do we help you quantify your impact on the world and the good that you do in addition to the things that you've done as a business? So a really good example of one of our companies that we exited earlier this year is Schülke. It's a healthcare business. And so they were looking at their GHG assessments, and we were doing everything that we do with all our portfolio companies, right? How do we get your reporting? Let's do your regulation. Let's make sure that you've got ES and G covered. And one of the things that was coming out of that was their GHG inventorying and their science-based target. And through those conversations, as we kind of mapped their maturity, one of the opportunities for the business case became these products, right? Products, sustainable products, innovation around products, it's healthcare. And so, with healthcare materials as a thing, there's always this risk reward around mission versus the actual product. There is a risk reward adjustment. And so by looking at their science-based target, we actually targeted innovation in products. They became the market leader during COVID for a particular type of wipe that was biodegradable, thereby penetrating that market. So in that particular segment, in their healthcare segment, they doubled their EBITDA at exit. And so we were able to actually see the value in that from an exit potential too, because of the story we were able to tell. But mostly it came from an organic place of really checking, their GHG, having these slightly difficult conversations of, what happens if we test it? And as we tested it, it became one of the things that which was championed most as we exited that business from kind of an upside potential.
Thanks for this really field experience, and we can see that among you three, you're not necessarily in the representative three that we interviewed as a panel of GPs, right? Definitely, if you are sitting in this seat today, it's because you already have best practices that you apply, and thanks for sharing this. This is also why you also been so helpful to support the testing of the tool that we developed and Nanse presented in detail just right before. You are using framework, you are using SASB, you are using a lot of things already, and then we came with an additional tool to try to put another layer of support, right? To extract value out of sustainability. What do you think about this tool? How it helps you? How it is different versus the standard process that you are using? Could you provide some feedback on how it changed your view of doing things? Jennifer, do you want?
I'm happy to start. So I think that there's pre and post, right, acquisition.
Exactly.
So I think from a pre-acquisition standpoint, we've talked about SASB. We also use SASB as one of the tools to get an understanding of material at a very high level, as well as the benchmarking we do to understand materiality in terms of what are our competitors doing, what are our customers asking for. Those are really important elements to that. But I think it's another tool to get just another perspective on what that means from a material standpoint, and also just kind of diving further into each one of those material topics along the six different topics to dig further in terms of, okay, well, really good questions to be asking yourself in terms of, and how is this company performing against these different issues? And so I think that's a very organized way to go about it. And then out of that comes the heat map, from which then you get into the post, if you go forward with the investment in the post-acquisition, from which you take action. I think also, just kind of thinking today, literally, as I'm kind of watching Nanse go through the presentation, actually, I think that heat map could also be quite an interesting tool for our LPs that are co-investing in deals. There's quite, with the EU sustainable finance disclosure regulation, that trickles down. It's not just about data collection, but it's also about how you consider sustainability from a due diligence standpoint. It is how we consider sustainability from a due diligence standpoint, but it's also how our investors do. And they're looking to us to also demonstrate how they're considering these issues during the investment phase. And so I actually think that this tool could be very interesting from a co-investment standpoint. I'll give you an example. And this is the one that I was using the tool for, where they came to us with SASB. And there's SASB at the very high level in terms of just the high level material topics, but then the actual sustainable, the sector focused list of questions. And the questions were too granular. They weren't really applicable for this company, and they didn't really tell the investor much as a result. So I think this could be a good in-between to give the investor more information, to make them satisfied that the sustainability issues are being considered, and that there is, an explanation for where there might be risks, and some thought about where there might be opportunities, how we can take this forward. So that's from a pre-acquisition standpoint. From a post-acquisition standpoint, I think we all operate very similarly. We have, we're a little bit of a different beast because we have a very concentrated portfolio and we have quite a big team. This kind of goes back to your team question from earlier. And it allows us to work very hand in hand with our portfolio companies. I think that's one of the things that's unique to our firm. And one of the things that, we love doing as a team is providing that kind of work, doing that kind of work with our portfolio companies. But as you go through that journey and as you go through the evolution with your company and you get to the data collection, which we do as well, we collect data quarterly, we collect it annually. We put, I mentioned before, our roadmap. Our roadmap includes going through a process with our companies in terms of setting the right foundation. That's frameworks, that's policies, that's having a materiality done. And that's also very importantly, creating a bespoke strategy for that firm that then focuses on, as Jhanji was saying, outcome-oriented metrics, okay? That process is a long process. I'll give you an example. We had one company, I onboarded the company a year ago, okay? We're now getting to the data collection in Q3. We're now getting into the materiality and the strategy in Q4. What happened between last year and now, and you guys will empathize, they did a transformational acquisition, right? Where you had the whole management team focused for 6 months on this big acquisition. So that's the reality, especially in the lower to mid-market space of what our companies are doing. It's the reality in many of our private equity strategies. So I think what's helpful about the tool is it allows you to get there faster, allows you to understand right up front what are some of these metrics and areas for performance improvement that I can be focusing on now and bake that in earlier into that evolution with our companies, because it is an evolution. And when you're trying to embed sustainability, you can push it, and we push it. But you know, at the end of the day, you really can't take too many shortcuts, because if you do, you really aren't making it more of the holistic value creation approach. So this helps get there earlier, and I think that's one of the benefits from a post-acquisition standpoint.
Thank you. You want to add something, maybe? No? I have a question for you. This this tool is now open source, right? So everybody can use. So there are many GPs in the room also. So would you encourage them to at least test and use the tool? Why and in which condition?
Yeah, I'm happy to do that. And Tensi and Julian, great job on the tool. I'll give you an example of how we've used it. And it's an unfortunate moment in the year, or which year you've actually created it, because we didn't have a ton of transactions, but we did look at a lot of targets. So maybe I can talk about the pre, and actually one way that we did manage to use it. So in terms of the pre-diligence, I think should you guys do diligence yourselves, which we also don't, it's a great way to get all of the material topics in less than 5 seconds. And so what it does is give you a very quick gut check on, here's the things that you should think are important. And you can basically apply the filter of your knowledge, your industrial advisors, your governance, the folks who are specialists, to say, is there a part of this business model that I might want to double click on? And if so, out of the 7 topics, I might have spent time looking at SASB and other frameworks, I can do that very quickly. Now, one way, even though we also have a team, for GPs who don't have a big team and are also perhaps in that very thick change management journey that we all are, of bringing the investment function along with us and getting them to be a bit more self-sufficient, it did dawn on me that actually if we were to scale, it would be a very good tool to just allow investment professionals to double check and to instead of using us to spar around the concrete areas, just get a sense themselves around, this is what we mean when we say sustainability. And I say that with the most utter love, right? As much as we're going through the change management journey, I always often see, a UN logo somewhere, and I'm like, oh, that must have been fun. Glad you learned something for that 10 minutes you spent finding that logo. But really, what we're interested in is the material topic, which the tool gives you very quickly. Now, in the post-investment phase, even though we didn't transact while we were trying to test it, one of the things that did happen was we've now got to the point where some of our companies in our older funds have done all the things that we had been telling them to do during the time that we bought them. So they've done their hygiene, they've gotten their, EcoVadis, they've probably done their SBT, and they've come back to us and said, we've done everything, but we actually don't know if we're pushing the dial. So how do we push the dial? And so what we ended up doing was using the tool in that instance and said, okay, well, instead of us now basically running our own mini diligence of trying to pick out the business case, where does the tool land us? And so it was a software company, and we used the tool, and one of the things that came up was DEI. And we actually then double-clicked with the DEI and innovation, product innovation. And we used the tool as basically the agenda item with the management team, the CHRO and a couple of their product people, and said, look, we've kind of done this back of the napkin. You've got great hygiene to start with. So these are the 2 or 3 bets that we could probably start to look at. What resonates? And it was kind of the kind of start of having that conversation, and eventually then bringing their leadership team along the journey, because we took the tool, we had the conversation, we then dug into the business case, we looked at ENPS scores, we looked at diversity, we actually looked at their ERGs and how they were looking at things like neurodivergent ERGs, and actually what was most material as a software company was their people. And so by the time we got to the ELT conversation, it was actually about how are we more resilient than our competitors, not because we have an EcoVadis score, but actually because we have a resilient workforce that's going to stick with us no matter what happens over the next 2 or 3 years, which is probably around the time where we start to talk about their exit story. So that was just a useful way to, if you're not transacting but you are having a refresher conversation, it's a great tool. I think if you are transacting, the fact that it goes from diligence all the way through to the whole period, and actually the slide that Tensi presented around outcomes, KPIs, I think that's also a very sticky subject when it comes to management teams. They can't differentiate between, hey, I've just hired someone, and actually this is the impact I'm having. And so try and use the tool because it gives you a lot of cuts in that conversation, because it's a very easy way to say, hey, look, if you hire a head of diversity, that's just something that you're doing. But the outcome actually is that you diversify your workforce and therefore have a more resilient workforce. I think it's a really good tool for GPs to try and crack that conversation quickly.
Thank you. I think it's now time to ask question to the crowd, and
I think if Alison hasn't been able to address, so we could maybe give it to her, and then we could also just have people ask questions at lunch, if that's all right.
Okay.
Yeah.
I'm fine.
I'll be really quick, and it's a double click on what Angela said, which was going to be my comment as well. I think one of the things that the tool does really, really well, two things. But the first is it's helpful in facilitating conversations between sustainability practitioners and deal teams and executives at portfolio companies, because it does a really good job of translating issues into the commercial implications of those issues, which I find to be very lacking sometimes in sustainability guidance. It doesn't make that bridge, and the tool does that in a way that I think is really helpful. The other thing I think that's also really helpful is that, in developing the tool, the urge was resisted to just develop something completely brand spanking new. Because we don't need something else that's brand spanking new. There are so many frameworks out there. There are lots of great guidelines out there in the ESG space. There are lots of smart people who have put thought into a lot of the frameworks that exist today. And so the fact that, I think what you've actually done is taken all of that and made it more easy to access, but not reinvented the wheel or given us a new framework that we now have to wrap our hands around. And so that I am personally grateful for. And I agree with everything that they both said earlier.
Thank you. One question that has been asked from the crowd also has been related to the adoption, right? Coming back to this question about how to structure the team and to make sure that this tool is embedded in your process and so on. How would you tackle this issue?
It's the difficult question to answer because it sort of depends on your size. And the types of resources that you have available to you. I fundamentally believe that no matter the size of the JP, though, that ESG diligence should be intertwined and connected with commercial diligence and should be owned by the investment teams who are running commercial diligence, because these are business issues. It's not a separate work stream. And so if the tool can be leveraged in a way to empower deal teams to do that, then, fine. If you have a larger team and you sort of are at a firm where you want the tool to be something that your sustainable investing team is using, that's fine as well, but there ought to be a way to loop that back around into the investing team process that's being run, so that ESG diligence is not something that's happening in parallel or at the side of someone's desk. That's what I would say.
I think we have the time for one more question, or not? No. At lunch.
Can we give a big round of applause for the panel?